The tax haven trap. In the world of global business, some of the biggest crimes don't involve weapons, they involve spreadsheets. In 2019, Everline Global Manufacturing, a US-based conglomerate producing solar panels and electric engines, was hailed as the face of America's clean energy revolution. Its CEO, Richard Halden, was a familiar face on major news outlets, the visionary who promised to manufacture a greener planet. But beneath the sustainability slogans was a secret pipeline, not of energy, but of money, flowing into the shadows of offshore tax havens. The growth of Everline. Everline's annual reports dazzled investors, $18.6 billion in revenue and record-breaking profit margins. But forensic accountants inside the Internal Revenue Service's Criminal Investigation Division, RSCI, noticed something strange. The company's effective tax rate was barely 2.3%. That raised questions. How could a U.S. manufacturing titan, with massive domestic operations, pay less tax than a small grocery chain in Ohio? When Everline's 10K filings revealed that over 80% of its intellectual property royalties came from subsidiaries in Luxembourg and the Cayman Islands, investigators took notice. The whistleblower. In February 2020, the case took a sharp turn. A senior Everline accountant, Melissa Hart, contacted the IRS whistleblower office through encrypted email. She claimed that the company's international tax structure was a shell maze designed to bleed profits out of the U.S. Melissa described falsified transfer pricing, invoices showing Everline's American plants buying components from their own subsidiaries overseas at exaggerated prices, effectively moving profits offshore. Her evidence included internal spreadsheets, contracts, and an encrypted folder labeled Routing Protocol. Inside that folder, investigators found what they called the smoking algorithm. The forensic algorithm. The routing protocol wasn't software in the traditional sense. It was a financial routing engine, a coded formula built into the company's enterprise system that automatically rerouted transactions through tax-friendly subsidiaries. Every sale made in the U.S. was logged twice. Once to the customer, and once as a licensing fee payable to Everline Luxembourg. To anyone reading the books, it looked legitimate, a routine payment for intellectual property usage. But in reality, the code was artificially draining taxable profit out of the United States and into shell companies. The forensic investigation begins. The IRS brought in forensic auditor Daniel Reeve, a veteran financial investigator who'd previously cracked the Orion Pharma money laundering case. Reeve's first challenge: follow the money. Using cross-border data sharing agreements and blockchain analytics, his team traced more than $4.6 billion in untaxed revenue transferred between 23 subsidiaries in Luxembourg, Ireland, Singapore, and the Cayman Islands. Some of these entities had no employees, no offices, just a name, a mailbox, and a bank account. Each transfer was disguised under a legitimate-sounding label: royalty compensation, licensing fee, strategic transfer pricing adjustment. But when investigators compared the records to customs data and production reports, none of the supposed international component trades existed. The paper trail was pure fiction. The first breakthrough. In June 2020, Reeve's team found an internal email exchange between Halden and Everline's chief tax counsel. One line stood out: keep the U.S. books lean, shift the fat where it won't be taxed. That single phrase cracked the case open. The team subpoenaed Everline's internal communications servers and discovered a series of encrypted memos between Halden, his CFO, and several external consultants. These memos detailed how to exploit loopholes in international tax treaties to create the illusion of offshore value creation. The memos even included mock audits to show what documentation to present if regulators come snooping. The web of shells. Forensic tracing exposed an elaborate scheme. Luxembourg Holdings SA, no employees, received royalties from Everline USA. Those funds were instantly wired to Solaris Ventures Limited in the Cayman Islands. From there, money was funneled to Haven Asset Management, a private trust in Switzerland controlled by Halden's brother-in-law. The final destination, Halden's personal investment fund, disguised under an alias. When federal investigators uncovered this, they realized Everline wasn't just evading taxes, it was laundering profits through a legal facade. The betrayal. As the net closed in, CEO Halden began erasing digital traces. He ordered his IT director to sanitize all non-US backups. But Melissa Hart, the whistleblower, had already mirrored the company's cloud archive. When she testified before a federal grand jury, she broke down in tears, saying, "We could have been the company that truly led the Green Revolution. Instead, we built a fortress of fraud." Her courage came at a cost. She was doxxed online, discredited by corporate PR, and quietly forced out. But her testimony sealed the indictment. The arrest and prosecution. By March 2021, 7 executives were arrested, including Halden and his CFO. The Department of Justice charged them with tax evasion, wire fraud, racketeering, and obstruction of justice. During trial, forensic auditor Daniel Reeve presented a timeline showing every transfer, every shell company, and every dollar hidden. The visualization stretched over multiple courtroom screens, a global web of deceit, as journalists called it. In a shocking twist, it was revealed that 2 former IRS consultants, working as private tax advisors for Everline, had helped design the offshore structure. Both were later convicted for conspiracy and professional misconduct. The sentence. The court ordered Everline to repay $6.2 billion in back taxes, penalties, and interest. Halden received a 25-year federal prison sentence, while the CFO got 18 years. Melissa Hart received a whistleblower reward under the IRS program, but she chose to donate half of it to fund forensic accounting scholarships. The moral and call to action of the story. When corporations cheat, they don't just rob the government, they rob every citizen who plays fair. Forensic accounting isn't just about numbers. It's about restoring trust, defending the unseen, and ensuring that no fortune, however vast, is built on deceit. Transparency isn't a burden, it's the price of integrity.